Hi, this is PR Sundar. Welcome to pre-market report. In past many FOMC meetings, the Fed officials have never indicated anything about the interest rate hike. You may remember a story in primary one. There is a guy who says, tiger coming, is keep on telling lies, and the villagers have lost faith. And when the real tiger came, so this boy says, tiger coming, nobody believed. So probably that would have happened yesterday. So when everybody was thinking the Fed will be keep on postponing their announcement of rate hike, so they have done it. And US markets have fallen and the Asian markets are down. And SGX Nifty is significantly down more than 100 points. That's because in addition to the global cues, we also have some bad local cues. And yesterday, both FII and DII, both of them sold for 850 crore each. That means put together it's 1700 crore. And that was very evident from the options positions. So yesterday I've told you, today I put it in Twitter also. There was a huge amount of call rating. And 15,750 call option, which is in the money, that was also written aggressively. So 15,750, 15,800, 850, 900, call rating all the way. And in fact, I also wanted to write calls, but since I did not have enough margin, so I bought the put option, 16,000 put option, because if I want to sell one call option, I have to pay about 1.5 to 1.6 lakh rupees margin money. Whereas buying a put option, I had to pay only about 15,000 rupees. So that also yesterday I posted in Twitter. So now let us discuss this Fed announcement in little bit detail. And you see, sometimes a company may declare a good result, but still the price will fall the next day. Or sometimes the company will declare bad result, still the price will rise on the next day. But in the longer term, bad result will bring down the market price and good result will bring up the market price. So therefore, we have to ignore the price action on the following day. Why? A company may declare a good result, but expecting that this company will declare good result, already people would have gone long so much. So on a day when they declare a good result, when the price goes a little bit higher, these people may book the profit. The same way, by expecting the bad result, people would have got shorted and they would have booked the profit after the results. So that may bring the price higher. But after a few days, things will settle. So the same way, people would have already taken the position expecting the Fed to do this kind of announcement. Or maybe they did not expect the Fed to make this announcement, so the long unwinding. So therefore, yesterday during the US market hours, the Fed has announced it. So the yesterday's price action, we have to ignore as the price action on after the results. But today and tomorrow, if the US market is falling, then there is something to worry. So yesterday's price action, we have to leave it. So today's price action is more important. But right now, US futures are down actually by about 150 points. But anyway, we have to see when the market opens. That's number one. Number two, most of the global markets are trading at all-time high and without a significant correction. So there is a possibility that this can be a trend reversal and the market may fall 10% or 20%. We do not know. We have to wait for the confirmation. But in our case, we have already corrected. In the month of April and May, the world markets did not correct, but we have already corrected. But then that correction was also bought into, now the market has come up. So anyway, our market is a high volatile market. So most of the time we tend to follow the global cues. So yesterday in the last 1 hour, if you see, the markets fell drastically and it tried to recover 2 times intraday, but both time it was sold into. So therefore today price action, so we have to leave it, but we have to see how tomorrow and after tomorrow our market behaves. But anyway, when this Fed event has turned against the markets, so I'm looking to sell 16,000 call option for the next week expiry. I'm not talking about today's expiry. I'm talking about the next week expiry. So I think now 16,000 will become the very stiff resistance, at least for next 1 week. Right? So if the US markets recover, the US markets absorb this shock, and then the story is different. And always I tell you, stock market has a funny way of behaving, and economy is very good. People have a lot of buying power. That is why the inflation is higher. So that means the US economic growth is very, very strong. That's why they're increasing the interest rate, but markets will go down. So sectors to focus will be naturally IT, because people have been expecting this. That's why the IT stocks are higher. So that's it for now. Hope you enjoyed the video. Thank you for watching.